ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time.
Boom. Good morning, everybody. Happy Thursday. Welcome to the morning show here on Stock Market TV. Spencer Israel, Steve Strazza. Sadly, no JC Parets this morning. Don't ask me where he is. I don't know. I just do know that credit to JC. He did warn me yesterday. He said, I'll be out today. I got some things to do. So he's doing those things. He'll be back tomorrow. But we don't even need JC today because, listen to this. Kenny Glick, Jeff Macke, Sean McLaughlin, all-star cast joining us today. A lot to discuss, a lot of earnings. JC's gone, so we're talking all the earnings today, right? Robinhood, right? Reddit, AppLovin, The Trade Desk, Crocs, Dutch Brothers. What else you guys want to talk about? We have a lot going on this morning. We may even do some live charting if we get fancy. Well, Steve, turn on the live charts and do some pre-market stuff. That could be fun, right? That could be fun. All right. No, Josh, no JC. Buy it all. Buy it all. That's the move. Hit the thumbs up button for me, please, and thank you. And let's get this show on the road. Oh,
hi, Spencer.
What's
How
up?
we doing?
How are your allergies doing? Better?
Oh yeah, they're so good today.
Is it true you're allergic to your cat? Is that true?
It is true. Yeah, very. Both of us.
That's not good, man. That's not good.
It's okay. Well, we get by. There's things you could do. Anyway, love my cats. No JC today, so that's a bummer. But I hear he's doing a video later.
He is doing a video later. He's around today. I know he's around. He's doing a stream later. We'll talk about that in a little bit because he's doing a stream with Jeff Macke at 4:00. So
we just had Jeff on the pod. I know we have him on the show in a little bit here. It's nice because on the podcast we try not to talk about like specific stocks. There were so many more that we could have dove into more. So this will be a fun talk.
Yeah, you guys recorded the podcast with Jeff, and it didn't go live yet. I think it'll go live tomorrow.
Yeah, tomorrow.
Right? Do you want to tease that a little bit?
We had Jeff on Off the Charts, and we talked about a lot of different things. His background is really unique and interesting, so we pretty much started there, and it was a lovely conversation. I think people are going to really enjoy it.
Awesome.
Check it out tomorrow.
All right, we'll talk about that more tomorrow when the podcast is up. In the meantime, let's do a quick state of the markets. How about that?
We're going to do this live like last time because it's just easier and better this way. So
I was going to say, you ready for this? Some things are up, some things are down. Bada bing, bada boom. Hey,
it's really muted out here in terms of U.S. equities. I'm getting the chart up. And Europe, or not even Europe, but just international, continues to be the theme. Can you see me here?
Your charts? Yes, I do.
All right, so S&P 500 futures coming in today, pretty much unchanged. Dow futures, pretty much unchanged as well. Here's a look at the NASDAQ. I think this chart breaks out any day now. We've seen participation continue to expand, international doing better and better, breadth improving here, albeit at the margins and in groups that not everybody loves, but it is expanding here in the U.S. I think it's only a matter of time before large cap tech, mega cap growth, these indexes go. I'm talking about things like XLK as well. We're just so close. We're so close here. Looking around to the world of commodities, copper's been super hot. Right? Copper's breaking out to its highest level since last summer. And when you zoom out on the chart, it only gets better. Completing this multi-year base, I think it ends up looking a lot like gold in the future. When I think of copper, I'm thinking about what is the dollar doing? The dollar is still resting right at the upper bounds of this range that it broke out of back in December. Tested it a couple times, just sitting here. It's very vulnerable. If they knock this back in the box, I think you all know how we feel about risk assets. We'll probably want to be buying a lot more of them and in larger quantities. If you look at different commodity currencies, they're looking super perky here. Something like the CAD. We've talked about this one over the course of the past few weeks now, coming off a key support level. You got a nice shake here. Look at that lower shadow. And now it's just sitting right up here at the upper bounds of this coil. I think that one's going to go. And if you look at the Aussie dollar, so this is odd USD cross, that's got a nice little tactical base too. These kinds of charts resolving higher speaks to an environment where we want to own more commodities. And then you think of something like gold, which for some reason doesn't seem to be as popular of a trade as in the past when it was at new record highs, but gold just continues to quietly work out here. I think silver probably follows Spencer, both of them up marginally here this morning. And then to round out the commodities, let's take a look at crude oil. This is a big level. I don't love seeing crude break this big blue line here. You know what this big blue line is? Oh, that's the VWAP from the pandemic lows. It breaks my chart when I zoom out because that's what happened. It went negative. Remember that? It literally breaks the chart. So I don't love seeing that VWAP being broken again, but we've been dancing around it. We've been playing with it for more than 2 years now. Whatever direction we eventually go in from this range, right? Think of just like we have those multi-year ranges drawn in other commodities and even the dollar, right, Spencer? We draw like some sort of multi-year range here in crude. And you don't want to see us take out the lower bounds, and breaking the VWAP here today is the first step to that. Bitcoin, before we're done here, down a little bit this morning. However, when you look at the Bitcoin stocks, Coinbase is up here because we have another monster beat. Robinhood has just been one of the best stories in the market for the trailing 12 months now. I'm amazed every time they report earnings. Their crypto business is like larger than their equities business now. And this happened out of nowhere. It probably won't always be that way during bear markets. It won't be that way. But right now, the crypto business is booming. They're entering, international markets, trying to get into Japan. It's working. I'm surprised by it. But when you look at a chart like this, it just won't stop. So the crypto stocks, at least some of them, getting a little bid from Robinhood today, which is up what, Spencer, like 10%, 15% pre-market? It was up like.
Look, we've seen this before in Robinhood specifically, right?
Yeah, they're a boom time stock.
Right. So we always say, is Robinhood a crypto stock? Well, the answer is sometimes, right? Because when there is a massive explosion in crypto interest and activity, it trickles down to Robinhood's bottom line, right? So Robinhood's crypto revenue was up 700% year over year, right? To $358 million.
I talk about the operating leverage of the crypto fee business, right? And I'm usually talking about it in relation to Coinbase, Spencer. I know you've heard it a million times, right? But during bull markets, when people are trading cryptos, the amount of earnings growth that these companies experience is absolutely absurd. So I think the read through here, you look at a stock, you look at a chart like Robinhood, right? Announcing what you just said, Spencer, 700% revenue growth. Look at Coinbase. They report tonight. Are they going to go in the opposite direction?
Unlikely.
They haven't been doing well for a couple months now, right? Crypto's been dead zone. And Coinbase has not looked like Robinhood, but I think it goes to, it's fair to reason that after looking through at the report at Robinhood, you could give a little read through into Coinbase that they're probably gonna have a monster quarter too. So I think the stock's probably a lot higher come tomorrow. And that's it for the state of the markets. Oh, wrapping up with Europe. Look.
Yeah, that's where I wanted to go, because every morning here I look at the German DAX, and every morning it's higher. Right?
Yes. Here's the deal. They're not stopping. Spencer just shouted out Germany. Germany's been the leader. But here's Italy, right? It's not just like the developed quality countries. It's the more risk-on countries as well. Italy breaking out. This is in US dollar terms, but in local, there's just monster bases here in a lot of these. This is European financials. Talk about risk-on over in Europe. They're breaking out of a massive base. When you zoom out on this chart, it looks even better. Look at this base, right? That's happening. Spencer, you mentioned the DAX, so you're talking about in local, but here's Germany and USD. right? So for all my US investors watching the show, this is the Germany that we buy when we invest in German equities. And could it be better than this? Look at this base. So this is the kind of pattern that when we see it, we buy it. And Germany's just breaking out of it right now. Been watching this base my whole career, and we're finally there. So I think Europe, things are just getting started. Overseas, I think there's just that's a huge bullish signal for the broader market for other risk assets. I think U.S. stocks continue to trend well. Maybe they're not the best game in town, like they have been for so long. But look at all these opportunities overseas. And wrap up with one more. Poland has just been red hot this year. Poland is up 140% off of its bear market lows just a few years back. And I think if you're looking for some sort of like beta in Europe, right, or more risk on vehicle, you want the EPOL. This is perfect. So you could draw this up in the simplest way here. We've had this ETF for, I don't know, going back to 2010. Breaking trend, massive trend reversal, just coming out of this base right now. Little coil's been in place. I think we're resolving higher from it now. EPOL, back to those old all-time highs, puts you back around 40. So I think it's all about Europe. It's about China. It's about everything but the U.S. right now.
Is there a fundamental story to be told there? Is this a dollar situation? Is this a tariffs thing? Or does it not matter? Does it not matter at all?
It's a rotation thing. It's a bull market thing, right? Everybody gets some in the bull market. Europe's been kind of lagging. So they're just picking up the slack here. I think you got to look to Asia and other regions like South America as well and expect them to start picking up the slack. And we're already seeing it from some. Colombia, Peru, even Brazil's been trending higher recently. So it's just a massive global rotation is what it is, I believe.
All right. Okay, so we'll have Kenny on in a moment. We'll have Jeff Macke on after that. We'll have
We have plenty of earnings.
Yes, so many. Can we pop up with a calendar for a second here, Alfonso, just to kind of get ourselves the lay of the land? Well, as far as what we have, there we go. So last night, Reddit, AppLovin, Robinhood, the trade, and it's not just the names, it's that there is big movement here, right? I mean, Reddit's well off the lows now, but the trade desk is down 30%, right? AppLovin is up 30%. Dutch Brothers is up 26% this morning. We talked about Robinhood up 14%. So big movement here off these reports. Let's talk about them. Robinhood, we just kind of did that. So Steve, where do you want to go next? Why don't we go with like the AppLovin?
What an incredible story.
The APP. I have to admit, I never actually remember what this company does, right?
It's like cloud data.
I know it's something to do with the cloud. I don't actually know what that means, right? Regardless, right? Everything came in above estimates last night. The earnings, the revenue, the guidance. It was a beat across the board. And like I said, it's up basically 30%, 29% this morning. So
the revenue growth here has been absurd. So 44% year over year to 1.37 billion. Advertising revenues up 73% to almost $1 billion. And they make up about 73% of the total revenues. Gross profit up 55% year over year, over $1 billion. And they have 77% gross margin. So it's been a special story.
You're saying software has high gross margins? No way. I'm stunned.
And particularly these guys. I mean, this stock's been as good as anything this cycle. Let's see. It's just been great. Another big story, Spencer, is Cisco.
Okay. Different
beat.
Different kind of stock.
Double beat and a raise. Is it? Because
yes,
the big beat was AI driven. Who would have thought? Cisco. Couple $100 million in AI revenues. It's not nothing. So they saw some big growth from, I guess, their AI division, and investors like it. This thing's going to break out. New highs. Looks fantastic. It's .com bubble base. What's not to love? You don't love it?
Looks like it looks like Cisco's looking for a new CEO. They just closed that yesterday, so maybe that's part of it too.
So all these good things that they report. The stock is up how much here pre-market? 6%, which is like 20% for a stock.
That's a lot.
Okay. And you're going to talk to me about the fact that they are looking for a new CEO. Is it still that guy Robbins?
Sometimes when a CEO leaves, stocks get hammered. Other times they get a huge
Who's their
pump.
CEO now? Is it still this that Robbins gentleman?
This is Gary Steele. Oh, he's the president. What the hell? Okay, so he's resigning.
Yeah, Chuck Robbins. He's been there forever. So
my bad. I misspoke. I'm sorry. The president is resigning. They're looking for
tell me more about things that don't matter.
Okay, never mind. Forget that. It doesn't matter. Regardless, Cisco is not in the same conversation to me as App 11, right? This is not a growth tech.
It doesn't have to be. We're talking about stocks that reported earnings, and this was a big report. And guess what? If it's not exciting, because that's kind of what you're saying, right? It's not exciting enough for you. So flip back to the App 11 chart, and then Fonz, maybe you could drop some stats for Spencer. I don't know exactly what we're at now, like how many X's we're at on the Cisco trade, but sometimes you're right, Spencer. It's like a blue chip, low beta, low volatility stock. Cisco, it's like a Dow stock, right? So you're like, oh, super boring. You can buy these things. It's called options. So there's an options market, right? There's all sorts of different derivatives markets that you can use as a market participant to put leverage on different trades or themes. So if you look at a stock like Cisco and you're looking at this chart, anybody with eyes sees this chart and says, this is something I want to buy. This is fantastic. But someone like Spencer might say, this is too boring for me. So when we go and we get that leverage in the derivatives market and we buy call options so we can make more money on boring stocks.
You know what's interesting? If I can go back to App 11 for a second. So
how much are we up on our Cisco calls right now, Alfonso? You know? What?
No, what? I'm laughing at the chat. So Rocket Science says that App 11 is digital advertising. That's interesting because you know what else is a digital advertising company? The Trade Desk, and they are not up 30% this morning. They're down 30% this morning on their report, right? They came in light on the revenue. They acknowledged that it wasn't a great quarter for them. And so here you have two different companies, same niche, right? Going in opposite directions here this morning.
What's the other one that you mentioned? Datadog?
The Trade Desk.
Oh, the Trade Desk. Oh my, what happened?
Yeah.
Down huge, right? I saw that last night.
So they missed on the revenue. And what else did they say?
It was down 30%.
Stumbled into a series of small execution missteps. Had their largest organizational overhaul in the company's history.
Wow.
Still had revenue growth for whatever that
number looked okay. Not 30% down day terrible, but okay. And then the Datadog too. If we're just hanging out talking about software stocks all morning, the Datadog reported. And this one's still a dog.
I don't even see it on my scanner, which means it's not up or down a ton. What is it up or down today? It must be
selling.
It's only down 6%. You know what I mean? So yeah. What do they say?
Lower beta than its peers, but no, they came in at 49 cents versus 43.
Soft on the Q1 guidance. Q1 guidance, actually. Yeah,
they beat on top and bottom.
Yeah, but the guidance for this current quarter was light. So anyway.
It's a bifurcated space. There's winners and losers. And honestly, most of them are winners. Some just win a lot more in software. A lot of good stuff.
That's true for a lot of industries. That's true for retail as well. Well, Jeff will talk about that when he's on in a few minutes. But yeah, a lot of times a rising tide does not raise all ships, right? And so, it kind of pays a little bit to know, or at least have an idea of what's going on under the hood of these companies, and in terms of their business and the numbers. The funnies can sometimes matter. I'm just saying.
Twilio's been so good too. That's another one. What a runner out of that base. You got these like speculative software bases. They're some of the best bases. A friend of ours, a friend of the show, pinged me yesterday. Was going through the IGV components, and he said, these are he wanted to know what my favorites were. He's telling me his favorites. And he pointed out the base in the GitLabs, GTLB. Throw up my chart. Throw my chart. What are you doing?
I don't know.
Just
I'm
look how
doing
clean this base is.
10 things at once.
I think is Google still involved here? I used to be in this, and it just went nowhere for way too long for me. But I'll get involved again. I'm really into these clean bases, and I want these fresh trend reversals more than the stale ones. I really do. And that's part of the reason I like China so much. And these other groups, they're fresh trend reversals. I just think there's, larger runways there.
Speaking of base, you want to talk Reddit?
Yeah. So, like, back to reality for Reddit. This is another one that's just been red hot.
Maybe forming a base here this morning, a new base.
I think dips are to be bought in this business for now. Like they just turned it on and started selling ads apparently.
Dips are being bought. Dips are literally being bought as we speak, right?
Okay. So they just started selling ad space, which is turning out to be a much bigger business than the market had originally believed when the stock IPO last year. And it's not just that, but I think that there's a huge story out there about how they're just an engine for a lot of AI products in the future. Reddit has a lot of data, and they've been around forever, and they're pretty much the best at what they do, and they're going to sell that data in the future. No, that's it.
Yeah. So the reason for the overnight decline, the reason in quotes, right, as if it really matters, right, is that their daily active users came in a couple million below the street estimate there, but and there are some other comments about Google's algorithm and that affecting search, whatever. But what I care about is the fact that the low last night was 173, and here we are now at 200, right? So dip has been bought.
They're already buying it up. It's a great point, Spencer. Yep. It's a great point. We can mention a couple from yesterday. I think we have a Biogen chart here. A lot of the earnings we work is a lot of the earnings work we do is on a 1-day lag. Naturally, it's time to go through these things. Biogen, 16 of the last 20 reactions have been negative. That's the kind of stuff we're looking for. I mean, so this is one that comes out every 3 months. It reports its results, and the market kills it time and time again, right? So you see a top like this, a decade-long plus top that just resolves lower, and the earnings trend is terribly bearish. This is a stock that you bet against. And I think, and it breaks my heart to say this, but we have these conversations on the show a lot. The worst thing that you can do is get drugs approved sometimes, or help cure diseases. You could see where this stock peaked on an FDA approval day for an Alzheimer drug that was many years ago, and it's been a disaster ever since. This was one of, like, did they used to call them, like, they had names and acronyms for all these big biotechs back in the day. Biotech was a hot space. Everybody was in cycles and cycles ago, and this was like one of the big names, and it's really come a long way since then in the wrong direction. So that's Biogen. Double beat, by the way, double beat on this negative reaction.
This is a stock that I have completely forgotten about.
Thank you. That's my point.
Right. It was talked about a lot over the years, but to your point, Steve, wasn't this one of the 4 horsemen? Did I make that up? Maybe.
Okay. I was going to say that. I didn't want to get it wrong, but that's what I was thinking too. This is one of the 4 horsemen.
I don't remember anymore.
Right.
But this was a stock from yesteryear.
Where have all the great biotechs gone? What was it? It was Regeneron, Amgen.
Well, let's see. There's Gilead.
Biogen, Celgene. Celgene was a big one.
Don't look now at Gilead, Steve. Don't look now.
We have a Gilead chart also. So Gilead recently had earnings and a huge pattern in Gilead too, but moving in a different direction. Can we throw up the Gilead? We get that up there quick?
Don't look now. That's a
yeah, we don't hate it, Spencer. We don't hate it.
That's a 10-year high.
Gilead looks fantastic here.
Is that true?
Yeah, it's in the chat. In the chat. No, I want the chart that we have. So I think we just about covered all the earnings. There was a lot of it, or a lot of them yesterday. And like you said, a lot of movement. Fast market. One more that should probably be mentioned would be the John Deere. I was trending really well.
Oh,
Got knocked down a little bit here this morning. They don't like it. So here's Gilead, right? Massive consolidation pattern, similar to Biogen. We're getting an upside resolution instead of a downside resolution. So this we really like, actually seeing one of its better earnings reactions in recent history. So the earnings trend here a lot more positive. So if you're looking for a biotech, how about green light to Gilead, red light to the Biogen?
wow. Looking good. Yeah, looking good. I did not realize. I know they're on the calendar. Did not realize Gilead looked the way it did. That's
And we could talk about Crocs, maybe.
yeah.
With Jeff.
Let's save Crocs for
Jeff.
Jeff because he
Yeah,
knows more
right.
about this than we do. All right. So
Jeff has a lot to say about the footwear stocks.
he does.
Talk about a bifurcated industry group.
All right. I'm trying to work with Kenny here. I know he's having a problem with his technology right now in his room, so I'm trying to troubleshoot that. So I don't know if we'll have Kenny join us this morning. But what else did we miss? Hold on. There was a couple. You mentioned John Deere. Did we talk about? There was Dutch Brothers, right, which was up 27% this morning.
I've never been to one.
They don't have them where we live. That's why you've never been to one.
Where are they?
They're all out west. It's like a Colorado thing. Colorado and California and that neck of the woods, right?
Okay.
I don't even know if I've ever seen one before. But in any case, top line beat, bottom line beat, guidance beat. But let me see if I can give you some more details than that. What else did they say? 35% revenue growth, same store sales of 7%. That's growth, that is. Same store sales growth. Jeff might know more about this one also because this is a consumer-based stock. So, yeah. All right. Jeff says he knows more. Great. So let's table the Dutch Brothers conversation. Actually, should we just bring Jeff on?
Bring Jeff on. Yeah.
All right. Jeff Macke. Jeff, turn your camera on, please. This is Jeff Macke. He is the he's like the guy when it comes to retail, right? Knows more about consumer and retail companies than anyone that I've ever come across. So let's see what he has to say about all this stuff. If you have any retail questions, probably best ask them now.
Throw them in the chat.
Yeah.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Jeff, what's going on?
Morning, boys.
How we doing?
Not much. Is my mic on? Can you hear me? We good?
We hear
Jeff.
you. Looking good.
All right, feeling good. Yeah, I've been watching a lot of Crocs, a lot of Dutch Brothers. I frankly have no idea why people would want to pay attention to biotech when you can go out and enjoy really, really super crappy energy drinks and Crocs. To me, that's a pretty nice Saturday. That's a pretty nice little. I'm just kicking it. I'm gonna go to the millennial coffee shop and then maybe just kick around in my socks with my Crocs.
Yeah.
Yeah. Which one do you guys want to talk about first? No, Crocs is spiking today. It's one of my favorite businesses. Great trading stock. It's up 19%, something like that. I mean, it's screaming higher. But if you look at the chart, and I actually sent Spencer one earlier, it's all the way back to where it was on January 29th, I think. Which, in terms of, I just don't call it a comeback because it's not really doing anything for you. These guys skipped that conference that we talked about a month ago. And so they've been a little cagey about the guidance. Your main takeaways, I mean, it's Crocs is, for as faddish as people thought that was, they're going to generate about $1 billion this year. The multiples on that stock are just bonkers. I mean, it's 5 times estimated value. It's about 7 times next year's earnings. They came out with guidance that was a little better than disastrous, but there's still some skepticism out there, which is why you're staying right below the 50-day and you're not really getting a breakout. You're just kind of recovering. The reason it went down so much at the end of January is the same reason all these shoe companies did, is Deckers came out and just took a crap on the entire market. They said that they saw some weakness in Hoka. They said, we've talked about that huge trade where just buy every shoe except Nike.
Yeah.
Deckers took a steel-toed running shoe to that thesis pretty hard at the beginning at the end of January when they reported they came out with weaker than expected guidance. Their Hoka line, they said, was more promotional. And really, those stocks have all been on a run just because they've been able to charge full price for super expensive product, which is always a really nice combination, and no matter what your industry is. And any kind of weakness in that is going to send the stocks lower.
So, hold on. Let's stay on that point for 1 second. Should we expect them all to keep trading together? Because it's been a mega trend for these smaller, more niche shoe brands for years now. It's nothing new. But when I look at Crocs and I look at Deckers, it hasn't been great just recently. Should you look through and give a read to something like On Holdings to maybe follow?
Absolutely.
Or are they going to be okay?
I'm still long them, and it's going to be a bumpy road. But it's defensive little puppy of a stock between now and when they report at the beginning of March. I mean, it's
Right.
They're not going to come out and pre-announce anything. The latest we heard from them was really bullish. They didn't mention all this weakness that Oak is talking about. They didn't have any of those problems at all. But they got to prove it. That entire space is going to have to prove it right now. I mean, people are fine with the Crocs number, but like I said, it's taken back 12 days of losses. So what? There's just going to be this headwind until they start posting some better numbers and we get some guidance. But in the meantime, just as a group, it's the bet on is not that they're going to blow out this quarter. It's that they can kind of pull off at least a baby version of what Lulu has done, and go from just a one product company into a whole suite of products and a lifestyle brand. There's a lot of money in being a lifestyle brand, but even for Lulu, it was not a linear road. You saw 20% moves down a lot on the way. 10 years ago, that was a much more volatile stock than it is today. It still is a pretty good trader, but it's the road to dominance is bumpy.
So then they'll naturally trade at like a much higher multiple than maybe something like Crocs, where they're not pricing in some sort of lifestyle brand in the future.
Crocs has a couple problems. One, just people hate the damn shoes. It just seems intuitively. It's like, are you kidding me? Like, it's these things. Get the hell out of here. The other thing, they did a Hey Dudes acquisition, which is boat shoes, and that has not gone well. It's a pretty big headwind for them. And,
people are wearing them where I live though, and I think they're super ugly. But I'm never.
Are they wearing them ironically, or they actually are wearing them and enjoying them? And
Dude, too many people are wearing these shoes. They're like huge and like bulky looking. It doesn't seem to be a boat shoe to me.
Godspeed, man. They actually stole the dude who made the Stanley Cup mugs into a marketing sensation last year. Crocs brought that guy in to try to fix the Hey Dudes, to make them cool again. So maybe the Floridians who are used to winning Stanley Cups are kind of on board with the boat shoes now too. He's just got his finger on the pulse.
It's amazing how these products pop up. Stanley is now like the new Yeti mug. It's got the straw and everything. It's fantastic. It looks like it's like a machine. It's huge and very heavy. It looks like a dumbbell almost. Yeah. And
with Crocs, I've worn Crocs right this second. I'm not gonna lie, and I'm not ashamed of that. I could pound it on the table like Khrushchev if I felt better about the stock. But the fact is, that's just been an amazing core business year after year. And it's just generating cash. Probably should just be a private company that someone's like, we're the Crocs heirs, and they're just cashing $1 billion. Look at those handsome things. Look at Spencer. Save some girls for the rest of us, okay? Just save some hotties for the rest of us.
These are my Crocs slippers. I wear them for half the year, pretty much every day, right? When it's chilly out. And
I was thinking about this company this morning because I was watching the end of that McDonald's movie, Founder, with Michael Keaton. And at the end of it, he goes on this whole spiel about how McDonald's was the perfect name. And he goes, I can't call a restaurant Crocs. And he makes fun of the word Crocs because that was his last name, Ray Kroc. And I was thinking, does Crocs know this?
That's funny.
Did they rip
he says
it off?
that in the movie.
I don't know. Maybe he should have thought of making an alligator kind of the mascot. I always thought that was basically what they were based on. But now they're doing okay. They're overcoming their name and the fact that everyone thinks they're ugly shoes for nurses primarily, or other people in the medical profession. Again, a really good business. Deckers is also a great business. I mean, UGG boots are right there with Crocs as a holy crap. Are people really going to wear these fur-lined things? Because you just must be shitting me. $1 billion a year business easily. But what happened with Deckers is they were really being driven by that Hoka move. That high end shoe that has been kind of commanding a lot of full pricing and share. I think On's doing better than them. I think that they're penetrating markets that Hoka is kind of retreating from. I don't know how much that's going to matter in the short term for the stock.
And Jeff, the Hey Dudes is who? Whose brand is the Hey Dudes?
That belongs to Crocs. So
Crocs,
they
okay.
kind of went from, it kind of makes sense because it's like, they're both shoes. On the other hand, Crocs are really specific, and so sometimes these acquisitions are bridged too far. They did great with it at first, just because they had so much Crocs distribution. But man, there are a lot of boat shoes on the walls of the Foot Locker right now that aren't moving very fast.
So now take this one step further. When these companies say they do all stumble in tandem, I don't think that necessarily means market share goes back to Nike. There's so many of these new little niche sneaker brands popping up. Every year there's a new one, especially when it comes to golf shoes. Literally every year there's a new cool golf shoe, and then it disappears. So I don't think it goes back to Nike. I think consumers have kind of transitioned to this new, smaller brand situation, and it probably goes to other brands that we don't even know about. Would you agree with that?
Yeah, Steve, we talked about it the other day, and I talk about it all the time, but you're exactly right. It's all about who's taking and who's gaining and losing share. It's not necessarily going back to Nike. Nike is not healthy just yet. The reason that you pay so much attention to Nike for this industry is they're a $55 billion a year business. And so if you're on and you're hoping to maybe crank out $1.5 billion, $2 billion this year, you just need a little bit, just a little thin little slice of what's going on with Nike. Whatever they lose, you can gather that, and that's fantastic. And so Nike's been forced to go more down market with the retailers. If you're Foot Locker, where Nike just has you by the short and hairies all the time, and it's like 40% of what they sell is Nike, and so they've had all this kind of low performing product on their shelves. Shoes are a hard game, man. It's hard enough to turn Foot Locker around without carrying 40% Nike. They've been delighted to kind of give some of that share to those other brands because they can charge more, get better margins, and it trickles through the system for them. But any weakness in that story, and it figures to weaken, right? No trends last forever. We've been in kind of the golden age of holy crap, every man on earth is wearing golf shoes everywhere he goes. Just kind of comfortable man shoes. It's not going to get hotter than this. Eventually, people are going to wear brown shoes at some point.
Interesting comment in the chat from Wavy. Why doesn't Nike just buy like a company like Crocs? Are they too small? Nike doesn't really do acquisitions, do they? Is that?
No, Nike's just got issues, man. It's a super insular culture. Like it's literally just kind of this campus in the middle of nowhere. And I'm not calling it a cult, but if you were going to make a cult and have it be a corporation, you kind of design it just like this. Okay. And so, which worked for them for a really long time. But right now, they're the kind of company that will spend 20 odd million on a Super Bowl ad and highlighting a player that they don't even make shoes for.
Yeah.
There's no Caitlin Clark shoe. You are paying millions of dollars for the most famous female athletes on the planet, and you're not making a product for her. There's, and their logic behind that is that there's political reasons. They got to kind of weed out the ways they're introducing a new product. And the real answer, a younger, more aggressive company would just be like, holy crap, make the woman a basketball shoe and let's start selling freaking a lot of basketball shoes. I don't know why they're not doing it, but until Nike did, you seldom get such a good example of here's a company that's really screwing things up in real time, and I can see it right there in front of me. But there you are.
And then even worse than that, if she did have a shoe, how big is the market for women's basketball shoes?
Well, it's if you're just selling them to WNBA players, not very big. If you're selling them to little girls, little kids. Holy crap, it's huge. This is all about let's take some shelf space at Dick's Sporting Goods, man. Let's that's where you want to sell stuff because kids grow. You and I've got kicks that freaking are older than my dogs that I still wear. I've got the Rocks Under Armour shoes still in my closet someplace, and they're just fresh as a daisy. I'm not the greatest customer because my shoes don't turn over, but little kids, man, you're making bank. You don't just sell one pair of Caitlin Clark shoes to those kids. You sell 3 pairs because she's going to be a 7th grader next year, an 8th grader the year after that. So it is a big market, and Nike's dominated so hard for so long that, in some sense, there's only one place to go, which is lower. But, it's the plateau. I think Starbucks is turning around ahead of them, but I think Nike, at some point somebody is going to just kind of get their shit together over there.
All right. Spencer, I know you had some stuff for Jeff.
Well, mostly I just wanted to hype Jeff up for this afternoon. If you want to bring up slide 2, Alfonso, Jeff is going live with JC at 4:00. Let's put the link in the chat right now. There it is.
That does look exciting.
I will also be sending out emails about this. So
it's gonna be good.
And
any teasers? What kind of stuff are you gonna be talking about this afternoon, Jeff?
Making money stuff.
Okay.
we've got
That's
earnings coming in. These stocks are movers, baby. I mean, we'll talk about Dutch Brothers. You guys mentioned that before. That's kind of, I've given that name a ton of thought. My kids owned it and I sold it because I'm an idiot and I manage better for them than I do for me. But that's just another explosive story where Starbucks kind of wallows a little bit. Turns out Dutch Brothers does $1 billion. Starbucks does $36 billion. They don't need a whole ton of that market share to make some serious money. And Dutch Brothers is just murdering the shorts today. You guys said you hadn't been there before. I have, just because that's kind of what I do.
They have those out west, right? They're in California.
Yeah, they're in California. Right. It reminded me of when you have a kid and you take a little taste of their baby food. And you're like, I like, peas and carrots. This tastes really good. And it's like, I mean, you can't spit it out of your mouth fast enough. There are young people lined up around the block for this stuff. And you get in there and it's like this grenadine and boba power drink stuff that just isn't made for people my age. It's a little bit baffling, a little bit sweet, a little bit kind of just gritty. But man, they're executing. They're just crushing. And they're at such a nice growth phase that it's as long as Starbucks is even kind of just flatlining a little bit, you can look at Dutch Brothers and they just have a great tailwind.
Yeah, but
and they'll be out by you guys eventually. They're expanding regionally where they go into pockets areas. They build out the entire segment and just become kind of a dominant player region by region.
It's only $10 billion stock still today. Yeah. Throw up my chart quick because this stock right now, pre-market, 30% like a magnet right to its old all-time highs from 2021. You can see it indicated to open up like literally right where it peaked out in 2021. So this will be a fresh breakout to new all-time highs if they could stick it. That's exciting from a technical standpoint.
It's exciting from a stock standpoint. I mean, this is kind of a great little burgeoning consumer name, and the stock has been on fire. People kind of badmouth the consumer-facing stocks, but man, Bezos did pretty well. Then the Walton family seemed to build some wealth using retail, and the Dutch Bros guys are going to go out there and create kind of a great little company. Another one that was a COVID darling, right? Because they do drive-throughs, and it's like Starbucks. Nobody wanted to go there. These guys already had drive-throughs, and it got way, way overhyped, and then got deservedly the shit kicked out of it for a long time. But it just kind of sat there. And as we've talked about before, those companies that were COVID babies, and they've spent the last 3 years actually becoming better companies and growing into some of the valuation without the hype, they're still undervalued. You can still find names that work. And Dutch Brothers has been rallying the whole time with a short base fueled largely by the fact that it just seems silly and like a COVID name, and they're just, they're going to blow up someday. Not really. They're generating $250 million in cash off not that huge of sales. It's a pretty damn good story at this point.
Do you favor like smaller cap names like this, or maybe like new entrants to existing markets just because there's bigger opportunities?
You can't have a whole portfolio of that because I actually have to eat what I kill, and it's a bummer to,
More risk that.
a little too much. But and I think over time, the best way to make money, for instance, I'm long Starbucks. Starbucks has been tremendous this year. It's been just a glorious, and the setup there is fantastic. But that's going to give you a lot less kind of pin action than you're going to typically see from a Dutch Bros. So Dutch Bros can kind of win just by Starbucks being mediocre, but it turns out Starbucks investors can win just by that company being mediocre at this point because they spent years just stinking out the joint, and I think that Brian Nichols is a smart guy. I think he's a good CEO. Yeah. Usually you get kind of 3/4 of decent CEO before he's really going to have to put up big numbers. And
are you biased?
That stock's going to work higher.
Are you biased towards Brian? Are you biased towards Brian Nichols as a target guy?
A little bit. I'm also biased because I got a friend who went to business school with him, and you know what? It's people talk, and
Yeah.
there are just some guys where it's like, he's the shit. Like, he's a really smart dude. I took a finance class with him. He's just a smart as hell guy. That goes
I
a long
hear.
way with me. It's a friend of mine took over Etsy a few years ago. That was magnificent because I knew the company before and they were run by a bunch of socialists. And I knew my buddy from business school was not, in fact, a socialist. And that turned out to be all the thesis I needed. I got on Etsy at like 14 and wrote it right away.
Oh, that's great. So that's one of the things we actually talked about, Spencer, if you want us to tease the pod a little bit more, is how Jeff kind of uses leadership in his investing approach. Always paying attention to who's running these companies. It's very important. Probably more so for these consumer stocks, or I would say at least as much as any sector.
Yeah, I like to know the narrative of who the guy is, and then I can put it into the context of the experience I have in investing, which is how you come up with companies like, the Gap has a CEO. They've been recruiting from within forever there, and it's just been this turnaround that can never happen because you need an outsider to come in. They hired the Barbie guy. He came in. He's just kind of getting that momentum. But what I'm looking for is someone who doesn't have all these kind of skeletons in the closet. He's not beholden to, respecting the Banana Republic people at Gap or just at Starbucks. If Nickel came in and said, what we shouldn't do is let everyone use our bathroom. Like we should not, in fact, be the toilet place for everyone who just kind of happens to walk by the place. That seems like kind of common sense. That seems like, hey, you know what? That is right. We don't make a lot of money from people pooping here. Like, let's make that happen. Less kind of toilet humory. He wants to serve people coffee within 4 minutes. That's a super good goal for Starbucks. That seems like something they should have had a long time ago. You can get a lot of mileage just from returning to not stupid.
I just want to mention I was with some people over the weekend and we did stop at Starbucks for a bathroom break, and I did buy something. Actually, half of us bought something because I felt weird about going there and everyone using the bathroom and not buying anything. So, and
I think those baristas are instructed to tase you, man. I think they would have taken you out. They would have frog walked you out and tased you in the parking lot.
I wanted to preempt anyone yelling at me, so I bought a coffee because I didn't know like the protocol there. But okay,
see that it's a moneymaker. That's like 1% same store sale boost right there. Look at that tailwind.
That's right.
Speak.
So
that's like Netflix taking away the password sharing.
It's best use of the word tailwind yet. Anyway, 4:00 Eastern time today. Jeff going live with JC. Can you put the chart, the image back up there, Fonz? The link is in the chat. It is in actually both chats. I will also make sure that emails get sent out about this. Jeff's going to talk about a few of his favorite stocks, how to make money in this space, and what he looks for, and also how to get access to Jeff's research. Jeff has been posting some research on our site. We will tell you how you can get access to that research and start learning more about this space, because arguably nobody knows more about what's going on here than Jeff. So any final words for us, Mr. Macke, before we let you run?
Watch Crocs at resistance. The charts matter a little bit too, and that's a story there where it's like, okay, how bad is the shoe industry? Are they going to give them kind of the benefit of the doubt? Right here is a very natural place for the stock to pause. Dutch Bros is just off to the races. That just looks like it's screaming. You're not going to learn much from that today, but I want to see if Crocs sells off over the course of the day as people just kind of look at it and say, you know what, wasn't that great? And that's going to be kind of a good tell for your incremental buying power on some of these consumer discretionary.
Shelf of resistance right here, where it's set, right around where it's set to open. Yeah.
Jeff, that actually brings up a good point. I know you are paying close attention to what the companies themselves are saying, but in the context of an earnings report, how much do you weight the reaction over what the company just said in terms of the what to think about it?
Quite a bit. It's the pre-market open shenanigans are one thing. It's take those with kind of a grain of salt. Sometimes you get a trading up, but the price action over the course of the day will tell me a lot. I need people to be more confident. Crocs sold off because they skipped a conference and Deckers crapped the bed. And that took like 25% out of Crocs. Expectations were low coming into today. People were kind of shorted, down 25% isn't that great a time to short stuff. So, you look at the pop and you see how it trades. It's anything moving 20% is probably worth paying attention to as a trader. And if that gets back over the top, you're still got shorts that are hanging on by their gritty Crocs right now.
How big is the short interest?
I don't even know right now. I'm not even trading it, but it's find someone who's not shooting against Crocs. They're shooting against the entire space right now. That stock went down like 8 out of the last 9 days coming into this.
Dear Lord. All right, Jeff, we'll see you at 4 o'clock. All right.
All right, Matt. Thanks, guys. It's been a pleasure.
All right.
Thanks, Jeff.
And again, the link is in the chat, and it's pinned to the top right there. We'll see you guys. See you at 4 because again, we're trying to do more stuff where we do more work with our friends who are experts in their specific area, right? And Jeff is that. He's very much that. And the coolest thing to me about that space, first off, it's consumer companies, right? We're not talking about Apple. No offense to Apple Oven, but like I've never interacted with that company in my life. Okay, I don't even know what they really do. But I know Starbucks and Nike, right?
Talk about this too.
Right. And so these are companies that we all know. They're
the most fun stocks. They're the most
fun stocks. And also in a weird way, they can also kind of be considered some of the most important stocks because it's where we're spending our money, right? These are like
it's the largest segment of the global economy.
Consumer spending drives the economy. So if you want to get a read through into the economy, go look at where people are spending or not spending their money, right?
I'll do you one more. I'll do you one better. They're the stocks that your everyday investor, first and foremost, should never try to analyze because you have so many inherent biases about retail stocks and the brands and the companies that you interact with on a daily basis. And that will pollute your mind as an investor if you're not careful.
First stock I ever bought was Under Armour. Why? Because I went to the school where Under Armour was founded, right?
Oh,
and
yeah.
So I thought Under Armour was the greatest company in the world in 2000 and
what's his name? Kevin Plank?
Kevin Plank, yes. Maryland legend, Kevin Plank. I thought this stock was the greatest stock in the world in 2015. Oops, I bought the top.
It was an incredible story until it ended, you know?
Yep.
But that kind of thing will happen to investors more with retail stocks, or at least just stocks that you interact with, goods that you buy and sell. Right?
Yeah.
Goods and services.
And that was a great lesson in that, you got to actually know what's going on here because it's not as easy as I see the commercials. They must be awesome because Under Armour was very much not that. So that was a great lesson to learn for me. So anyway, 4 o'clock today, Jeff and JC, and then tomorrow morning after the show, we'll post the podcast that Jeff did yesterday with Steve and Sean, which is not talking about stocks at all, right? Talking about everything else besides that. So it's gonna be a good couple of days. A lot of Jeff content on the channel.
Yeah, I'll be tuning in whenever Jeff talks about retail stocks. I'm listening.
All right, it is 9:24, 5 minutes and change until the open. We'll have Sean McLaughlin stop by as well. It's been a quiet day. I think Kenny said he's already done for the day, which is kind of wild. So what else do we have here? I'm looking through my list. We didn't talk about Moody's. I know they were on the calendar. Let me just double check before I put my foot in my mouth again. Right? Wasn't Moody's on the calendar? Did I make that up? I don't know. Tonight, Coinbase, DraftKings, Twilio, Airbnb, Roku.
Tonight's I find Coinbase, DraftKings, and Airbnb all to be fascinating stories. And they all hit in the same afternoon.
Yeah, it's a big Steve night for earnings. Airbnb is I don't own it now, but it's a very frustrating stock.
Listen, there's something there though. In the same way that here's Airbnb. It's like Uber. Is it not? Is it not a verb? Did you Airbnb it?
It totally is.
It? Right?
It totally is.
It's the same story. They dominate this market. Sure, there are other players, but they're the main player. And I just think, they're I'm not saying hotels go away. I'm still very bullish. I'm hotels over Airbnbs. I'll just throw that out there. hotels over Airbnbs if it's possible. Sometimes it's not even possible. And you're happy to have an Airbnb. So I think it's a great business model, and they're going to be around for a long, long, long time. And the stock price is only going to be moving higher over the years. So I want to get involved. And when you drop a VWAP on Airbnb, if you want to throw up my chart, drop it from the all-time high, which was set way back early 2021. We're sitting on it. So like this is the level. So it could be like a positive earnings reaction that gets me into the stock. Finally.
Airbnb's direct competitor is VRBO, owned by
Verbo.
who? Owned by who? Expedia, which looks pretty damn good right now. So that's
but you're buying a different business with Expedia, I think.
Yes, you're buying. It's more diversified. This is true. But
and Rachel, I agree. I noticed that too. Rachel. Interesting.
Okay. No, I've owned Airbnb several times, waiting for that breakout. I've gotten shaken out several times, waiting for that breakout. I had it a bit after COVID. It's been very frustrating for me personally, right? So, again, no position. Wait and see what they say tonight.
The chart doesn't look bad here. Just kind of failed to top into a coil. You got the VWAP coming in. I could tell you a bullish story about this one, but let's get through earnings. Let's see what happens.
Steve, was there anything of note in the hot corner today? I was astutely watching Oxy yesterday just to get a sense for what the stock did, and it traded down pretty much all day. Right? So I thought that was funny. We talked about that because of Berkshire Hathaway's 30th purchase of that stock, which was disclosed yesterday. So.
Well, I'll tell you what stood out to me. How about that? You can throw up the table quick. It was a massive table today. That's what happens when we get these political filings, because there's typically a handful of moves, not just one, and we try to cover everything that is material to the politicians. But today's story to me is either AMD. Are you throwing up the table? I can't see.
It's up.
Okay. Either Advanced Micro. So you got I think it's the chief marketing officer was the buyer there, about $500,000. So not nothing. That stands out because AMD has just been in a just relentless downtrend for, since September now, almost a straight line lower. So to see an executive step in, put some skin in the game at this level, that's something to notice. And then the other one is, I don't even know if I should talk about this. It's so small and speculative, but this is what I would call special situation gold miner. This is Northern Dynasty. Copernic Global Investors came out with the 13D. That's an activist filing. And they upped their stake. They more than doubled their stake. So they're already a 6% shareholder, and they're upping that to 14%. That's large. And when you zoom out on this chart, this is one of these protected property stories where they own apparently something that could be one of the largest mines in the world or something like that in Alaska, but it's protected because of where it is, and they can't drill on it or do what they need to do to extract the minerals from the ground. But a base like this always has me interested. So to see big institutional investor come out here, take a much larger stake than they previously had. Look, it's highly speculative, $380 million stock, but it's a bull market for gold right now. Gold's making new all-time highs. Northern Dynasty, I think, is an interesting name.
NAK. I don't know that one.
NAK, it's been around for a while. It's highly speculative, not for everybody. Do your homework on this one.
Well, that goes for any miner in general, right? Highly speculative.
For sure.
High
this
risk.
Is one of those that literally, like, there's no digging, there's no gold extracting. They own a property. It might just be land rights. I don't know.
There might be gold there.
What?
There might be gold. There might be gold there. There might not be gold there.
So that's what I'm saying. You're right, Spencer.
We don't.
But no, that stood out. Listen, whenever you see, and that's an activist filing. So whenever you see a big investor like that, that's for a company like this that probably needs capital every now and then. It's big to have the institutions behind you. So when somebody comes out and doubles their stake, that's big money, whatever, going to 14% of the stock. I mean, just do the math. What is that? 50 million, 60, 70 million. So it's not nothing.
Yeah.
Big investment there. Good calls, print, and go wavy. Love it, man.
As a reminder, everyone, the Hot Corner is a free daily note. It goes out every single market every single weekday. Basically, there's a couple of weird, like there's like twice a year where it doesn't go out, right? Because there was a holiday or no filings, but pretty much every day it goes out. It takes maybe 30 seconds to read the whole thing. That's kind of the best part about it. And the link to get on that list is in the description of this video on YouTube. There's actually several links in there, all of which link to free emails that go out every single day or almost every day. So get the hot corner. And if you read this enough, you will start to understand what is real and what is not real in the sense of insider filings. And there's a lot of wrong or incorrect discourse surrounding these filings and what they mean, especially as it pertains to members of Congress.
Flawed.
Trading flawed. There's a lot of flawed discourse around these filings. And if you read this enough, you'll start to understand and kind of see the patterns and what's real and what's frankly just noise, because there is a lot of noise out there, right? So like Ro Khanna, for example, today bought how many is that? It's like 7 stocks, right? Doesn't actually mean a whole lot, right?
Buying index names, nothing
Right.
special. Nancy Pelosi comes out and buys some AI biotech in size. That kind of stands out, So.
Yeah, a little bit. So anyway, get the hot corner. We don't talk about it enough, but it is again, I read it every morning. It takes me 30 seconds. That's kind of the whole idea behind a lot of the things that we do, is they can be consumed very efficiently. So check it out.
Cisco calls almost a 4x. I know somebody wanted us to follow up on the stats. Cisco calls almost a 4x.
Cisco calls.
Boring stocks.
Yeah.
Stocks. And shout out Nancy Pelosi, hot corner AI stocks. Tempest AI TEM breaking out of this base. Been waiting for this, so my trigger just went off. Up 8% here today. This one's going to be a ripper.
It's value tech.
I actually got to go. Spencer, I'm going to go heat up my coffee and put in a few orders here, and then I'll be right back in a minute to join you and Sean. Why don't you bring them on?
Shawnee, baby.
We got Sean. Do we have a Sean?
We're supposed to. Sean's coming. I know Sean has a recess prepared.
Yeah, I think I have. I'm going to convince Sean on a trade, I think.
You know what? I know we didn't get to do a flow show this week. This may end up being a bit of the flow show right now, actually. So go heat up your coffee, Steve. And while you are gone, I will hang out here and bring Sean on.
Yo, Jay, Steve, do you like Mondelez? If I saw Mondelez on Monday, I would have liked it. But I wouldn't buy something like that here. What a great setup. You got the shake back into the coil and then the go. Almost looks like Canadian dollars. All right, see you in a few.
All right. He will be back, allegedly. That'd be kind of bad if he just left and didn't come back, but no, he won't be back. All right, 9:34. Markets are open. Let's just take a quick look at what's happening out there. U.S. market slightly in the green. NASDAQ leading the way. Oil down about 1%. Bitcoin down 1.5%. Oh, ETH outperforming this morning. That's on a relative basis. That's interesting. What else do we have here? We talked about Germany already, still crushing it. Looking at the different sectors, it's been a whopping 5 minutes since the market opened, so not a lot to learn from that. I mean, as JC says, let him dance, right? So I would say somewhat muted action. Nothing really stands out on my screen. NVIDIA. Tesla stands out up 3%. I guess it's notable. It's been kicked down really hard these past few weeks, months even, right? So anyone want to take a flyer on Tesla here? You got an easy out, right? 320. There's your out, or somewhere around there, right? So that sticks out to me this morning. Semis are strong. What else? That's kind of it. Not a lot jumps out to me. Strength in the NASDAQ, like I said. So I don't have a ton, some divergence in the Mag 7. That's normal on a intraday basis. So No Kenny today. Kenny is going through a technology upgrade today. We're switching over his the technology he uses to stream his room. So he'll be back tomorrow. We'll get him back on the show, and all will be well in the universe. Okay. Before I bring Sean on, is there anything else I need to mention? I mentioned the 4:00 stream. Oh, by the way, Kenny has been going live in the afternoons. I don't know if I've mentioned that, but at 3:30, if you hop on our YouTube channel, he's been going live there during earnings season. Mostly just Tuesday, Wednesdays, and Thursdays, the main earnings, right? So I don't know if he'll be on today. If the technology is good to go, then he'll be on. But just wanted to mention that. So next week as well, Tuesday, Wednesday, Thursday, he should be live in the afternoons. Thursday is also when Sean does his weekly options video. So that's at noon Eastern. So make sure you tune in for that. And oh, look at that. There's Steve.
Yeah, man. I'm back.
Okay. I don't know where Sean is. I mean, I know where he is. I just don't know where he is in relation to this show.
Yeah, sometimes guys like us, we get busy around the bell.
That's what's happening. Sean is doing his thing at the open.
Crazy. It's crazy, but it happens.
Let me see. What else was I looking at? Oh, and on that note, actually, there he is. Sean's here.
We talked about the other day, and I'll just say it again. It seems like every other day lately, there's some sort of bullish headline about Baidu. And again, Baidu in talks with Apple, helping develop and do AI things on the China iPhone. That's a huge deal for a company that trades at 10 times earnings, doing AI things with Apple. They got earnings coming up next week. I was saying on one of our calls yesterday, I think this is the best trade on the sheets right now. I'm super long, loaded in, got more long yesterday. I'm long calls into earnings. I think this is a massive top that's not a top, and Baidu is probably the most undervalued. So I think has some of the highest reward potential of any of these Mag 7 of China trades right now.
If you missed Steve's stream from Monday, he talked all about the China theme, why it's his favorite theme of the year right now, how he's playing it, how you can play it, I just put the link in chat. So check it out. All right. Should we talk options with Sean?
I would love to.
Okay.
Good morning, Steve Strazza.
Shawnee, how we doing, buddy?
Doing well, man. Busy morning. Had to exit something here right at the open.
Yeah.
Were you in that app loving?
Nope.
Well, we got we had one for the good guys this morning. It's not very often that you have a bull call spread that the stock gaps higher through both strikes, way past both strikes, and you get to sell the spread for far more than you wanted to sell it for. That's a great thing. We had that this morning.
I mean, this has been, we already talked about today. I'll just reiterate, one of the absolute hottest stocks in the market this whole cycle. And this is just one that you just buy and hold on to for dear life.
This was this is a trade that I don't do very often, but I put this trade on I don't know, less than 2 weeks ago or about 2 weeks ago, knowing full well that this was an earnings
trade.
bet. Yeah. This was an earnings bet. We were using earnings as the catalyst. We bought options that expire tomorrow, specifically because we were using the earnings as the event. And it's beautiful when it plays out exactly the way you designed it. It doesn't happen all the time, but congrats to, I know there's a lot of people in my chat room that are pretty happy about it. So congrats to all of you. Congrats to me. I'm in a good mood this morning.
Home run, baby. We love hitting them home runs. I think you should take that capital now and redeploy it in another earnings bet because, I mean, listen to what your account is telling you. This is information, Sean. It's working.
And
I think Baidu is calling you. Baidu is calling you.
Yeah, we talked about that one yesterday. It's not the same setup as that app loving, but yeah, I mean, I'm interested. I told you yesterday that, I mean, I like the setup. I like the potential there. The thing that gave me pause was that I was already in a bunch of other China names. But, you know, after a nice big fat win this morning, maybe I should feel a little extra salty and go for it anyway.
Live a little. Go have some fun. Have some fun
Go
out there.
ahead. I don't know, Strazza. I mean, look, this is something we should talk about. We should talk about this, is that when you have a really big win, whether it's a big trade or a good week or just like a lot of things are going really well, I just did it right here, Strazza.
Go for a walk.
Right. I'm getting like feeling a little full of myself, right? This is the danger zone.
Oh yeah.
When you're hot, at least, and maybe I should speak for myself. When I'm hot, when I have a really great winner or have a great run of winners, it's very easy to fall off your game and just be like, oh, everything's working. I'm just going to keep throwing trades on because everything's working. Well, in my experience, that's been when trouble tends to happen. I'm not saying trouble's going to happen now, but I'm just bringing that up because that just reminded me, like, hey, Sean, tap the brakes a little, stick to your process.
It's a classic amateur move to come out and start putting more trades on or more size on when you're on a hot streak. And you only need to get burnt doing that a couple times to learn that lesson the hard way.
I can't tell you how many times in my career I've been in such a hurry to size up and get bigger and bigger and bigger. And if I would
Jump
just
in entry.
Yeah, if I would just take my damn time, you know, everything would be just fine.
Sometimes the best trade to make when you're red hot is no trade at all.
Sometimes the best trade to make is you take your profits and you go buy a flight to Tahiti and hang out there for a week.
Ooh, Tahiti. They got golf courses there?
I don't know, never been, but I am going to Jamaica in a week from this Saturday. I'm pretty excited about that.
I'm excited for you. That sounds like a blast. I need a vacation.
Yeah, I haven't had a real vacation in a while, so I'm excited about that. Yeah, you know, it's fun. It's funny. You and me and the rest of the team, we occasionally go to vacation spots for our portfolio accelerator, but we don't do any vacation there. Like when we went to Sonoma last summer, that's a beautiful place for a vacation. We didn't really vacation.
It's a gray area. It's a gray area. We try to have some fun,
Yeah.
but we are there for business, and typically we're just there for like 2-3 nights. So
And we're going to New Orleans in May, also a great place to just let loose, but we got work to do when we're going to be there.
I've been looking up food spots and things to do. I'm excited.
Have you ever been to New Orleans?
No, never.
Oh,
Been
dude.
to Louisiana.
I mean, everyone knows about the party scene there. I mean, I'm not gonna tell you anything you haven't heard, but I mean, the food, I could spend a whole week there just eating different crazy food I don't even know what it is. I don't understand it. I can't pronounce it. It doesn't matter. It's all so good.
Like beignets.
Everything, dude. That's the least of the. I mean, beignets are great, but there's so much more.
All right, good. I'm into food, so this will be fun for everybody. Shout out Portfolio Accelerator.
Yeah, I'll save the rest of my comments on New Orleans for recess because this is not supposed to be about that.
So what were you doing this morning? Were you putting on new trades or just taking profits?
No, I was exiting. I have two trades that had earnings last night that needed to be exited. Well, one was exited, and that's the app 11. So I had to get out of that this morning, which was great. And that was the spread. It was I was long the 400 450 bull call spread. The stock's trading at 500 this morning or higher last I looked. So I needed to exit my spread. Look, coming into today, I would have been happy getting $40 for that spread, which would have been a huge win, but I was able to get out it for 48 and change this morning, which is awesome. The other one is we're long a bull call spread in Robinhood, also a great earnings reaction. Not quite at our profit target yet, but I had to I had to manage that trade this morning because in case it did gap higher than my exit price, I wanted to get the most out of it that I could, but it didn't quite get there. So I got my my good till cancel order to sell it at $16. It's a $20 wide spread in Robinhood. We're along the 40-60 bull call spread in September. So that's why we're not at our profit target because there's still time.
Yeah.
But yeah, had to work that this morning as well. But those are all done now, so now we can do this.
I mean, you win the earnings trade lately, huh?
Well, the Robin Hood was
Big
not
winners.
Robin Hood was not put on because of earnings. It's just, sometimes when you put trades on that have a, 6 to 9 months expiration, you're just going to have to ride through some earnings.
Well-
That's great.
Well, that's a good point, and they'll actually end up being the catalyst for a lot of your big wins in bull markets too.
Right,
The
right.
earnings reports.
So Robin Hood was not an earnings specific trade. AppLovin was. I mean, we went into that with the intention that, hey, we know earnings are coming, and that's the reason we're getting into this trade. 'Cause I think it's going to surprise to the upside, and lo and behold, we got it. And you and I say this all the time, Strazza. We say that earnings surprises, if you want to call them that, tend to happen in the direction of the underlying trend. And there's no denying that the underlying trend in AppLovin has been up and to the right for quite a while now.
Dude, so many of these hot runners, they just keep going. They just keep reporting good results, and they keep moving higher. Another one I'm thinking about this morning, in that same vein, you see the hims and the hers? It's like every day this thing's just up more and more. Hims up another 9-10% today.
Yeah, I'm a little bummed about that
Friends.
one because we were talking about that when it was trading in the low 30s, and yeah, I missed that one. Swing and a miss. Yeah.
All right, Spencer. Let's do some resets and get out of here. We got some trades to make. We got notes to get out. I heard
What's
Sean
up, Spence?
has a
Sean-
good reason.
Yeah. Oh, what is this?
Oh yeah, this is well, I just wanted to give this out. I think I teased this last week. This was me and my assistant coach and our undefeated 5th grade boys basketball team. We went to see the Colorado Buffaloes play number 4 Houston last week in Boulder, Colorado.
Awesome.
Naturally, Houston wiped the floor with Colorado, so we expected that.
Yeah,
But
they're good.
we had a great time. This was at the end of the game, after the game, so you can kind of see the stands have cleared out behind us. This is about 15 minutes after the game ended, but we were invited to go down on the floor and have a team photo at center court. And boy, the boys had a lot of fun. We had a great time. Even though our team lost, it was still fun. It's amazing seeing 5th grade boys or just young kids, looking up to, they're not, I guess college athletes are not professional athletes, but to these boys, they're professional athletes. And watching these kids watch the professionals doing their business and watching how they warm up and how they practice and how they pass and all this stuff, like, it's really cool to see the kids really get that. And like, we drill them all the time in practice about why we do certain things, why we run certain drills, and then to take them to a game and show them, hey, see what that just happened? That's why we do what we do in practice, and then have the light go on in their heads. It was really cool, man. We had a really great time. And yeah, those boys right there, undefeated so far this season.
Wow.
6-0. 6-0.
Is it the coaching? Is it the coaching, or is it mostly the players?
Look, if it is the coaching, I'm not going to take credit for it. The guy on the right, he's the actual basketball mind. He knows basketball and he handles all the drills. I'm just the guy that pumps everybody up. I'm the guy that, hey, you can do it. You can do it.
Sean holds the clipboard. That's what Sean
That's right.
does.
That's right. I'm the clipboard guy. He's the guy that really does stuff. So if there's any coaching credit, it goes to him. His name's Kurt. Kurt's the man. But yeah, we're having a lot of fun, man. It's if the basketball season's actually, our last game is next week or this coming weekend, so we're done, man. It's too soon.
Wow.
Coaching hoops, that's some good stuff.
Yeah, man, a lot of fun.
Brings back fond memories, no doubt. No doubt.
All right, so I guess the last thing I'll say, since since we were talking New Orleans, Strazza, is that since you've never been there, and the food thing is amazing. I'll tell you, my wife and I mean, it's been 20 years, but 20 years ago, my wife and I did a long weekend in New Orleans. And at the time, this is not true anymore, but at the time, we weren't really big seafood eaters. We would dabble, but we weren't big seafood eaters. In New Orleans, a lot of things is seafood based, no surprise.
Boy.
So when we went down there, we went there with this mindset that we were going to go to these various restaurants. We were going to ask the locals where to go. We didn't want to go to the tourist spots that everyone thinks of, like the Brennans and places like that, which are great, by the way. I'm not ripping on them, but we wanted to go where the locals go. So we asked like our hotel concierge, and we asked various people that we would meet, like, where's the place to go? So we would go to these places. There were a lot of them were hole in the wall places. Some of them weren't, but they were still just off the beaten path. And every time we'd go there, we'd sit down, ask the waiter would hand us the menu, and you'd look at the menu and it's all like in Creole and French, and like, I can't read it. I don't even know what it is. And I would just we did this at every restaurant. I would just hand the menu right back to the waiter and say, hey, what do people come to this place for? Like, what's the thing you guys are known for? And he or she would say, oh, we're known for the blah, 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 blah. Great. We'll take 2 of those. And that's what we did everywhere we went. I have no idea what I ate, but everything was amazing. Everything.
But Spencer, hold on.
Wait.
Are we traveling outside of the United States? Do they not speak English in this place you're describing?
I mean, it's New Orleans, man. It's the melting pot. There's
Really?
Creole, there's Cajun, there's French. Sean,
Cajun's not a language. Still not a language.
Sean,
No, Steve, you're going to be amazed because I'm not alone when I say this, but a lot of people agree with me. When you're in New Orleans, I feel like it's the only place in continental U.S. where you feel like you're in a different country. You really do, and it's in a good way.
Wow. Okay.
I've heard. I've never been to Louisiana, but I've heard people from there and their accents, and it can be hard to understand them for sure. Sean, the question for you is: was the seafood that you ate fresh from the Gulf of America?
One thing I did eat, and it freaked me out, and this is probably the first time I had it, was we had a dish where we had on each dish we had 2 boiled crayfish. By the way, they call them crayfish down there, I'm pretty sure, not crawfish. 2 boiled crayfish sitting on the plate staring at you with their eyeballs intact. Like, that was freaky, but we did it. We ate it and it was good.
All right.
You know, about the name change, Spencer, it doesn't matter because anybody who ever talks about this, if you're familiar with the Gulf of Mexico or America, it's simply referred to as the Gulf. Nobody finishes that sentence. Trust me. I have to hear about it every day. I live right on it. It's
Okay,
called
so
the Gulf. Yeah.
This is a fascinating topic.
changed. Yeah.
True.
This is a fascinating topic to me because, as you guys know, I don't watch the news. I don't read the news. I hear the things that are important. They eventually filter their way to me, but I don't watch news. So anyway, this whole Gulf of America thing kind of blindsided me. And I have a lot of questions. Number one, how did this name change come about? Like, is there a committee that decides what things are called? Like, who agreed to this? Or did we just say, fuck everybody, we're calling this Gulf of America?
All I know is it was a big deal over the weekend when Google Maps officially changed it from Mexico to America.
I saw that.
That was like
Sean,
the whole thing.
It's the Gulf of America. We took Gaza, and we'll probably own Canada soon too. Okay, so just accept it. All right.
No, I have no problem with it. I'm just wondering how that comes to be. Like, when you name things like the Gulf of America, like, is it just like nicknames? Like, you no one's in charge of creating nicknames. Someone just calls you something and then it sticks. Is that how this worked?
I think it's unclear.
I don't know. No one knows.
We're going with it.
Yeah. Anyway, as far as recess, shout out to breakfast for dinner. Did it again last night.
Ooh.
It's the best. If you can do it, just do it. Just do it. Just have some eggs. Why not? Right?
Eggs. Whoa, you must be living in high times, man. You can find eggs. Boy, you must be rich and connected.
No, Sean, fake news actually. Because last time I was at the store, I did the smart thing and I bought the liquid egg substitute.
Okay. Yeah, my wife went to Costco on Monday and squadouche at Costco. And then yesterday I went to Trader Joe's. Nothing there. No eggs could be found anywhere at any price.
Just saying the liquid eggs are as cheap as they've ever been. All I'm saying.
Okay, all right.
All I'm saying. All right. Sean, you're going live at noon for the jam session. 4:00 today. JC and Jeff. We'll see you guys for that. Smash the like. Thanks for watching and go make some money. All right. Adios.
Run it. I can't take no loss. I don't even